So welcome back. I'm here again, and if you can listen to me, just let me know, okay? I mean, I need to know that because all of you know I'm just struggling with my audio problem. So please let me know if you can listen to me, okay? Uh, Omaumi, thank you, brother, and Beam, Beam NG, hello, brother. Simon, hello. But just let me know. You can listen to me, okay? After that, I will just start my streaming. If you don't hear me, then I need to fix the problem. Guys, do you hear me? I assume that you can hear me. I really don't want to wait too much time. I mean, I hope you can hear me, okay? So, there is the market right now, and I would like to talk about today's morning session first, then I will go to the macro, and then if I think I have time, then I will talk about the PM session as well. Thank you, brother. Thank you for confirming that you can hear me. Hans, this is the hourly chart and dollar index. You see it went above, took all of this liquidity, tapped to the hourly fair value gap, and then breaked lower. I was expecting that market will reverse from here. I mean, this order block level, and I was expecting that. Okay, I wasn't forcing the market to stop over there and then reverse. I didn't force market. I was expecting that market will reverse from there. But whatever market will do, it will happen. I have no, I don't have any ability to stop the market. So it went lower. Simon, is it possible that the DXO went lower because the daily fair value gap was traded through the 50% with the body? Brother, this I told you before this morning session that NFP, this is kind of news where market manipulation happened by I mean, by the human being, not by the algorithm. And you can, this is not my thought or this is not my statement. This is the statement from ICT himself. He told that this kind of big event, that manipulation happened by the human being, not by the algorithm. So you can't actually see any kind of logic why price went below. But after it, then you can, mark the level why market went there, why market came here. You can do that after it happens. So the manipulation time, though ICT told not to trade Friday, but in my little experience, near about 2.5 years, I saw that after the AM session, at PM session, we get some kind of clear price action. That's why I told you to skip the morning session and wait for the PM session, okay? But I will talk about this, why price went there and why here. I'm just talking about this, okay? So if you see it, when it has cleaned this buy side liquidity, I was expecting that market will go through this hourly fair value gap, and I told it, so many times that I want a clean, sharp run, okay? But it didn't do it. It even just came back. The sharp run was over here. This hourly fair value gap, I got the sharp run which I was expecting here. I got it here. And if you were in my, I mean, Twitter, I tweeted when I have seen this. This is the last fair value gap where price hold. When it will trade this fair value gap, it can't be broken. If it is broken, then we will see some kind of big lower run. So this fair value gap is the last, inefficient place about this big price run from here to here. If you look at this big price run, you will see this is the last inefficient place. So market actually came to make it, to trade this fair value gap, and now it started to go higher. Now what what I am looking for right now. I will just say about this. I will just talk about this. Then I will go the morning session. But it is important to understand. Right now, I'm expecting. This is my expectation. It will go through this. This fair value gap. I will just remove this one. You see, this fair value gap. I want to see market will go through this fair value gap. The recent fair value gap, not this one. Okay, this fair value gap. Market will go through this, and then it will use this fair value gap. This fair value gap as a support, something like this. Let me just show you something like this. I would like to see that. And now I am not expecting that market will clear this buy side liquidity today. I am not expecting this. I want some kind of higher run. It will happen when it will break this fair value gap. Until it's not broken, I don't have any trade. Until this low is not broken, I don't have any short for DXY, and I don't have any buy for DXY if it is unable to break this fair value gap. Okay, I don't mean the news itself, but the sell after, brother. Okay, brother, I think it's clear for you. I am not looking for the logic here. I am just watching the price. Why price came here? This is the manipulation created by human beings. So if you would like to do some kind of, if you would like to read the price before it happens, then it is very difficult. That's why ICT himself told to avoid today, not to trade in Friday. Okay, that is the reason, because you can't. The price won't give you the precision. There is no precision after this kind of big news event. You see, price came below. It has broken all the PDR. Premium or discount array. It just went go. Below, traded this fair value gap. Right now, it's here, and this is the fair value gap where it should trade. It should go through this fair value gap if it would like to go higher. If it's react from this fair value gap, then it will go lower. This is the expectation right now. Is it clear? If you understand the reason, the logic, just let me know that you really understand the logic. So when I have seen this, my expectation is it will go higher. This is my expectation, but I am not forcing market to do it. If I force it, then I will be strict to my, I mean, to my expectation. Then I will try to look for buy. And when I will look for buy, I will take more losing trade. I will go with the market. I won't force market to go with my expectation. Right now, I'm expecting market will go through this. If it go through this fair value gap, I will look for buy. If it shows me that it respecting this fair value gap and would like to go lower, then it has to break this low. It will go through this fair value gap as well as it will break the low. Then it will start to go lower. Then I will look for sell. That is the logic. So I'll go to the Nasdaq, because this is the place where I would like to go. Okay, I'll go to the 1 minute chart directly. I will show you something that is very important. This is the price action. You have to read this price action. And before that, I would like to show you the opening range gap. Okay, it's open and this candles close. This is your opening range. If I just remove this one, I will just remove this one, and I will put the opening range gap, because this is more important than that fair value gap. This is your opening range gap. All of you know what is this gap, right? All of you know. This is the closing price from yesterday. Here. Okay. This is the closing price from yesterday, and this is the opening price from today, 9:30. I'll go to the electronic chart again. What do you choose in Q? BMNG, I already told 2 to 3 times why I choose NQ, because it is actually, it has more opportunity to take entry rather than E-mini S&P, because E-mini S&P is too low already. That's why I'm trading NQ right now. I will go back to E-mini S&P, but it will take time. Uh, when I will go over there, if I will tell you the exact reason why I came back to, I mean, E-mini S&P. So this was the run. I'm just talking about from the morning session. So this was the NFP run, non-farm payroll. I saw this run. We all was over here. So price went below, and this is the 9:30 open guns. Where is the 9:30? Here is the 9:30. Price went above. What we do when 9:30 open, I mean when market open at 9:30, what we do? We actually observe price. We don't take any kind of trade at 9:30. Why? It's because this time market actually do some kind of manipulation. This is the place where you will frame your trade. And if you were with me in the, I mean, in the morning session, you will say I will talk about this as well. I took some kind of entry over here. I mean, I just put it here, show you the reason why I do that. So this was the place where we will frame our trade. I saw this as the liquidity taken. That was the market structure shift. I told you in morning session why this travel gap was important for me. I told you to keep it on your chart, because later this will help you to, I mean, you will see some kind of reaction from this specific fair value gap, not this fair value gap or not lower. Okay. So price actually went above. It should respect this fair value gap and then started to go higher, but it didn't do it. It went lower. Where? To this fair value gap. This is 1 minute chart, guys. I'm not talking higher time frame. I'm talking about 1 minute chart. There, if you see here, this 1 minute chart, in Nasdaq, December 2023 contract. Okay. So price came to this fair value gap, went higher. It was consolidated over here. That was the macro time. We were waiting for the entry, but actually we didn't get any kind of entry over there. Then price came back one more time. Where did it go? Look at the price. First time, second time. Did any kind of body close? I mean, it didn't even close into this fair value gap. It closed just above the fair value gap. It didn't go into the fair value gap. I would love to see, I mean, this, the consequent encroachment. If price, I mean, the body close above the consequent encroachment. Why I am talking about this? Because when price was over here, there was a relative equal high. After this run, this equal high was created over there. So I was talking about that if price would like to go lower, it should clean this buy side liquidity first. After cleaning this buy side liquidity, then if I get any kind of market structure shift to the lower portion, I will go for short. But before cleaning this buy side liquidity, after the macro, I mean, macro is totally different. I'm not talking about macro. I'm talking about whole price action. If you would like to take any kind of entry for short, you have to clear the buy side liquidity first. So I was expecting that it will go lower and it will clean this sell side liquidity and this sell side liquidity. Both of them are very clean, and it is obvious that it will clear this sell side liquidity. So that was my expectation. I'm not telling that market will do that. That was my expectation after watching the price action from the NFP. When this big run, I have seen that. Then price actually came here. Why I took this entry? I'm just telling you the reason why I took this entry. And before going furthermore, just just let me know one more time that my voice is okay. I mean understandable. Okay, just let me know that. Comment it so that I will be sure that my voice you can understand. That is very important, because this part is very important, and you have to take all the notes. If you don't take any, I mean notes, no notes, you just leave the, I mean the this session, because you won't be benefited from here. Trust me, you won't. Please let me know you can understand my, my voice. Okay, just let me know. So price when came here, the body was closed above this fair value gap. I was expecting lower run. Okay, not clear. I'm facing the, uh, I have the internet problem. Okay, I'm in Bangladesh, and Bangladesh is kind of developing country. We don't have like 5G or something. So I mean, maybe we have, but in the rural area, we are actually face so many problem. I think I have no idea how to fix this. I called the Wi-Fi office, and they told me they will check my connection tomorrow. So let's hope for the best. I'm extremely sorry for that, guys. I understand. I'm really sorry. What your problem? How to fix this problem? I will need some more time, maybe. I'm sorry, brother. Really sorry. How we can take trade at 10:21? Isn't it outside the macro? Yeah, it's outside the macro. 10:21 is outside the macro. I'm not talking about macro. I'm talking about the whole price action, because the whole price action I'm just trying to give you how to read the market, how you will expect and how you will react with the market. This is the thing trying to I'm trying to give you to read the price. Macro is different thing. You already know how it works. Now you are you are understanding the price reading. This is how you will read your price. You will expect something, and if you see market is reacting like your expectation, you will put your entry with your maximum lot size. And if you see market is not reacting with you, then you will go with the market. You will see what market would like to do, then you will go with the market. And in that case you will take some, like, if you really love to take uh, 5 contract maximum, okay, and if you see market is not reacting with your expectation, then you will maybe take into 2 contract, maximum 2 or 1 contract, because that is low probability for you. Market is not reacting with your expectation. That's why, okay. I think you have to understand the price action. No, brother, this is not macro. Just forget macro. I'm not talking anything about macro right now. I will go to macro later. I'm just talking about I mean, the price action. How do you take entry outside of the macro? So when price came here, you see this is the only imbalance in this price run from here to here. This is the price run. This is the imbalance. Market came here. If you see the bodies, it has closed above the fair value gap. Shash boy, I got it already, and I have no way. No way to fix this. So I'm really sorry for that. Just I'm apologizing. I'm very sorry for that, brother. I'm really sorry. I'm really sorry, brother. I need to continue this conversation. I'm really sorry for that again, brother. And when market came to this imbalance, I don't care about weeks. Bodies were closed just above the, this imbalance. By said in imbalance, sell side inefficiency. I I would like to see that if I want to see this buy side liquidity will clear, I will let price, the body go until consequent encroachment. I don't want to see body will close below the consequent encroachment, the 50% of this level gap. Here I got the I mean perfection. The body were closed just above the fair value gap. Okay, that is the thing. Market came here, trade this imbalance, went higher, makes relatively equal high. How do you know where is the DOL? That means draw on liquidity. How do you know where is the liquidity? Here is your liquidity. Market made this for you. This is the liquidity. This high. They are the relatively equal high. Whenever you will see this kind of equal highs, you will mark them as your buy side liquidity. You see, I'll just move them now because I don't need this one. You see this low and this low, they are the relatively equal low. This is your sell side liquidity. Market will come here. When market will reverse, you will see market is somewhere here. This sell side liquidity will be your target. This is how you will, I mean, you will mark your sell side liquidity or buy side liquidity. This is the easiest way, in my opinion. This is, I'm not forcing you to follow me, or I'm not telling you that you will do the same way. But this is this is the way I mark my buy side liquidity. I mean, drawn liquidity. This is my way. I saw that most of the time get perfection by marking them. Okay, why 907 fair value gap is important, brother. This is the only imbalance. Like below here, you won't see any kind of imbalance over here. Is the imbalance, that's why it's important. And if you were with me in morning, I mean the AM session, I marked this before price came here. I marked it. If you were here, I think you saw that. That is why it is important. But if it able to break this fair value gap, then this is the sell side liquidity that would be the more obvious. But it actually react from this fair value gap. When price came again here and show me that it doesn't want to go lower, the bodies were just closed above this fair value gap, went higher, clear all of this buy side liquidity. In the meantime, there I get the market structure sheet. Now you can ask me, this is not my market structure sheet. I'm agree with you. You see this high, and okay, that's my market structure sheet. I didn't do it in front of all of you. It's because if I did it swing high, then this high. So this swing high is eligible for the market. I mark this as my market structure sheet. Now, where is my fair value gap? You see there is a fair value gap. Let me mark it. This is fair value gap. There is a very small fair value gap. There are two fair value gap. I would take my entry, not this fair value gap. I won't take my entry to this fair value gap. I will wait for this fair value gap. I marked it before because this fair value gap is now more important than anything else over here. Yeah, the consequent encroachment is also very important. You can wait until it reach to the consequent encroachment, but I will suggest you to take your entry when it will tap to the upper, I mean the this level. Okay, just higher fair value gap, higher level. When it will tap over there, you will take your entry, and this buy sell liquidity will be your target. How many pips over there? It's kind of, I mean, 44 handle. What do you think about 44 handle? You have any idea how much money over there? It's too much, brother. Trust me. Though it looks like very small, but it is huge. Now, how do you understand this time it will work? Mm, it was here. I mean, when it went above here, it came back. I didn't take entry over here. I didn't do anything over here. Why I didn't do anything over here? Just forget macro. I mean macro entry. Just forget it, okay? But that was the time when macro happens. Macro means, I told you, I am telling you again, okay? Macro means something. Price actually gather its energy to run, to give you a big run, okay? That that thing does macro. So when price came into the macro, I was waiting for the macro. I mean, how this macro work, and I saw actually macro cleared the sell liquidity again. It cleared from here, it cleared from here, then it cleared from here, and this time it shows me that it would like to go higher. That's why it closed just above the fair value gap. All of this thing gave me confidence that market will go and clear this buy side liquidity. I don't know. I'm not sure. You have to watch this price action. When I got this market structure shift, this big run, this fair value gap, after all of this price action, after all of this consolidation and manipulation, when I have seen this run, after macro, I get confident that it will trade over here and it will clean this buy side. At least it will clean this buy side liquidity. If it would like to go lower, it will go lower, but after cleaning this buy side liquidity. Now, why I put my stop loss over here? You can ask me. The reason is this is your opening gap. I mean, this low is very important. This opening gap low is very important. Uh, a wick can go to the opening gap low and then it started to go higher. So if you put your stop loss over here, maybe you will be stopped out. I mean, we can just go to the lower part of the opening gap and then go higher. Now tell me, I mean, one of my brother he asked me, how do we trade this opening gap? How we utilize this opening gap? Now talking about opening gap, okay? This is the 9:30 opening. When I saw this happen to my chart, I mean here, before it opens, I showed you that this is the high level. I mean the opening gap high, it will be the opening gap high, and I will just see the opening gap low. So I forget to mark it, but I remembered the price level. The new day opening gap low is the yesterday's closing, and this candle's open is the I mean today's open. Okay, this is the opening gap. I saw that market went to the consequent encroachment of the opening gap. Remember, guys, this is the I'm okay. Let me just mark the consequent encroachment first. So, do you have the notebook with you? If you don't, just write it down. You will forget it. Just whenever I will give you some kind of information, try to keep it, okay? Because later I won't talk about this anymore. So this is the consequent encroachment of this opening gap. How do I know without marking it that is the consequent encroachment? I mean, you see this opening gap written over here. This should be like placed just middle of the opening gap. And if you just take a look from this high to this low, you can just measure this gap or the consequent encroachment by the number. So it is very easy. When you will start to watch the gap and the consequent encroachment, you won't need to mark them as well, but it will take little time, but it will be easier for you guys, trust me. So price actually to the opening gap consequent encroachment. Look how the bodies react, how it reacted over there. Did any kind of bodies closed above the consequent encroachment? No. You will see how it will work until it is inside. I mean, it will stay the lower part of this opening gap. You will expect market will go lower until it will go above this buy side liquidity, clear the buy side liquidity, and then it will start to go lower because this is the opening gap. There was no, I mean, no trading. And just a second. Okay, so everything is okay. 933, if price made parallel gap, that will be important. Is that act like NROG? Is it like this? What is NROG, brother? I don't know what is NROG. Now at 9:30 you will get only the opening gap, nothing else. If you get any kind of, I mean the this kind of parallel gap, you have to mark that separately. That is another thing. But I'm talking about opening gap, which you will get every day, at least every day. Okay. So you have to read the price. I mean, yeah, this is the new range opening gap. This is the new range opening gap. Okay. Price came here. You have to one thing you have to remember that whenever price will go like this consequent encroachment, this high and this low, this is the place where you will get some kind of reaction. That should be your expectation. This is too easy. Just remember on this. Whenever it will go some kind of fair value gap, it will give you a reaction. Either it will, reverse from there or it will go through there. That is the thing. But this is the place where you will get something. I mean, some kind of reaction. Like price is going lower. When it will reach over there, it will start to go higher. Price is going higher. when it will reach to the opening gap, you will expect some kind of reaction that it will go lower. Maybe it will go lower. This is the way you will realize this level and this fair value gap was there. I mean, that was the range. That means price was bound into this range. Is it complicated? No, it is not complicated. I told you why this fair value gap is important. I told you already 3 times. If you don't write it down on your notebook, you will forget this. This is not my, I mean, this is not my fault, okay? What? Brother, at 9:31, how did, man, this is the opening range gap, brother. And this opening, look, this is this low. You see this low? This is 9:30 candle low. After yesterday, this is the first candle at 9:30. That's why I marked the opening, not 9:31. This is not the first candle of today. So this candle low is the first candle of from today. That is why 9:30 is I marked from 9:30, okay? Not 9:31. After all of this price action, when I get this market structure shift, I was confident that market will go higher and it will clear the price liquidity at least, okay? Now I will go from this price action. I hope you will understand what happened over here. Now, when it go through this, I was expecting that market will come back and it will clear the sell side. What price did? That was my expectation. I'm not telling you that market will do that. I'm telling you this is the thing I was expecting. Okay. So price went above to this opening gap, also the new day opening gap. And you see this run. This was a very nice run, a very nice clean run. Now went above this new opening gap. If I were here, I mean in front of the market, how I just let me get this on. It will be easy for me to let you understand. Okay? Think like market is over here. What I will expect is still now I'm expecting that market will go lower. Why? It's because there is this sell side which they are relatively equal low, and also this sell side liquidity and this sell side liquidity, all of them are here. So I'm expecting that market will go lower. I'm just removing this one, okay? This is not important anymore. I'm still expecting that market will go lower. Now use just I will go with the replay mode. Okay, here when price came here and tapped to the I mean the upper part of the opening gap as well as the new gap, I got some kind of reaction. Okay, this is the reaction I got, and it went higher, higher to the I mean the new week opening gap, very near, but maybe the next candle it will touch. Okay, here you see it it go to the opening gap. I mean the new week opening gap low. Now this is your range, opening gap high, or if you say this new day opening gap, this is your lower range. This new day opening gap low is your higher range. Okay. Uh, Agma, I'm very fine, brother. I think you're a little late. I talked too much already. But join from here. I hope it will be helpful for you. Uh, I will I will give you time to ask me the question, but first let me clear the concept first, okay? Bimanji, I'll tell you to ask me the question, but before that, I just need to clear this concept first. This is very important and very crucial. If you don't understand this, you won't do anything. You can't understand anything, okay? Now, when price came into this place, you see this empty place. This there is nothing. Lower, I have the new day opening gap. If you remember from the morning session, this is the new day opening gap. This two red line, and this high is the opening gap high. Over here, this is the new week opening gap low and the consequent encroachment. Price is just middle of this range. When price came here, and what I am expecting, I'm expecting that price will go lower. That is, I'm expecting. When price came here, I would like to see that it will go through this. I mean this opening gap, new day opening gap, and also the opening gap high. It will go through this and it will go lower. I'm not talking about any kind of fair value gap over here. I'm talking about the more stronger fair value gap. This fair value gap is more stronger than this kind of fair value gap. I mean the CB or BC. Okay, this opening gap is more powerful than this kind of I mean BC or CB. Now, when I saw that market came here, I was expecting it will go through this. Instead of it went higher and it actually break this low. Means it closed above this high. I mean this new week opening gap low. That would be my first time when I will think, okay, maybe price won't go lower before trading this consequence. This is all you will think. This is the way you will think how market is reacting. Okay. Now let's see what it happened. And then the very next candle, it has made this new week opening gap low as its support. L- Listen to this very carefully, guys. This is the way you read the price, and this is the way you will, I mean, you will make your entry. This is the then price actually break this opening gap low and started to make this low as its resistance. Let's see what price did. Okay, I'll just go faster. It came to the opening gap, I mean new day opening gap and also the opening gap high. Okay, maybe this time it didn't go to the opening gap high. Yeah, it didn't go over there, but it make this opening gap, new day opening gap as its support. What I was expecting, if market would like to go lower, it will go through this, but it didn't do it. I mean continuously it is making this as its support. You look at the bodies. The bodies close just above this, I mean this gap. What happened here? Bodies closed into this new day opening gap. What is it like to tell you? It is telling you that I don't want to go lower. I would like to go higher. Now, the very next to candle, it was just, I mean, trading over there. Again, it so market went above to the consequent encroachment. So how do you take this price action? How do you take your entry? So far, you have on entry here. I mean, you took the entry here to this buy side liquidity. If you are with me, so you already know you took this entry. Okay, now here you are expecting that market will go lower, and this is the time. I mean after the silver bullet, this is the morning session just before the noon, before 12. So you are eligible to take your entry over here. How do you take this entry? Just forget about macro. I am not talking about macro. I am talking about price action. You are expecting lower price. This is your resistance level. This is your support level. I'm talking with the support resistance that will be easier for you to understand. Whenever you will see this two type of range, on range is above your price, on range is below your price. You will mark this two level and you will watch how it is reacting. If it would like to go lower, it will go through this level. If it would like to go higher, where it can go? What is the next level? This constant enforcement is your next level. You won't take this entry, this run. You don't need this run. You will just take this entry. So price went above this new week opening gap, came back again, failed to go lower. What it did? It shows you that I don't want to go lower, brother. I would like to go higher. What it did over here? It tried to break this gap, failed. Come back again, didn't go even, didn't take even this low. Instead of that, it has made this sell side liquidity, I mean the relative equal low. Now look at here what it did. It came here, tried to go through this, failed. Next time it came, it just stopped over there. What is it saying to you? It is saying to you that I don't want to go lower. Instead of that, you see these candles, they closed above this resistance level. That means it is telling you, I would like to go higher, brother. Please don't make me, I mean, don't force me to go lower. This was your lower, I mean lower, support. Okay, support trends. This fair value gap or the this low of the opening gap low. This was your resistance. Prices over here. I think this fair value gap would be better to understand. What it did, it even didn't close one time this fair value gap. Instead of that, it went above, above, above. What does it mean? It would like to go higher and take this buy side liquidity. I'm not talking about this whole run. I'm talking about now. Where is your market structure shift? Just let me know. And that is your, I mean, that is the thing you should understand. Where is your market structure shift? If you ask me, brother, do you have the market structure shift? And I will tell you, you have the market structure shift. Where? There. That is your market structure shift. If that is your market structure shift, where is your, the entry? You see this level, this is your entry. Now you will tell me why I won't take this entry. What is wrong with this? Is there any, is there any way to take this entry? Yeah, you can take that entry. That was inside the macro. The problem is there was no market structure shift. If you mark this high as your market structure shift, I won't go with this because this high doesn't meet the requirement for being a market structure shift swing high. That is the reason where I don't like this high to mark as my market structure shift. So that will be your market structure shift, and this will be your fair value gap. Market went above to the consequent encroachments. Look all of these bodies. They closed just below the consequent encroachment, though it went higher, 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 higher. How do you understand that market will go higher from here? It's because just let me show you. Okay, it's because this is the place where market has two way to go, either lower or higher. It already tried here to go lower but failed. This will make you confident that market will go low, high. And where will it go? It will go to this liquidity. Maybe I'm just making you disappoint that, brother, I will take only this run. It was a great run, so I would like to take all of the run. I am not agree with you. If I were you, I would never, hold my trade until then. Okay, why? It's because this is the place where I have the clean buy side. Look, you will take your entry over there. Your stop loss will be just lower of this candle which has made the, mm, fair value gap, and you will take your over there. So how many handle do you have? 32. Do you think it's small? No, brother, it's not small, it's huge. If you ever trade with live money, you will know 32 handle, how much money is that? That is huge. And BMNG, I will just, I will, I can't just give your answer, brother. Just give me sometimes, okay? Then I will tell you to ask me the question, and then I will reply all of your doubts. I'll clear all of your doubts. But let me just finish this, okay? First. Then I will talk about your questions. So this is how you will read the price. This is the price action. This is the reading price action. Will you take any kind of entry over here? No. This is the place where you are not eligible to take your entry. I mean, after 9:30 opening, you are not eligible to take any kind of entry. Here you will frame your entry. How will you take your entry? You will go for short or you will go for, long. From the high time frame analysis, you know price should go lower. That's why I am expecting for lower run, but I'm not forcing price to go low. I'm telling him, I'm just letting him go, and I would like to go with him. I saw it would like to go high. I took my entry over there. When I put my, this one I told you that it will short or something like that, but there is no other way because I don't know you will take entry or not depending on my analysis. I really don't want that. I hate that. So that was first, that would be first entry, and that should be your second entry. I mean, from here to here. If you would like to hold your trade for rare case, you can hold it until the opening gap high. But in my opinion, this is the best to do. Now, I would like to, I mean, uh, should I talk about that? No, I shouldn't. No, brother, I shouldn't talk about that. So maybe later I will talk about that. Right now, it's not important. Okay. So you have seen how this new day opening gap and the opening range gap we use this opening gap. I mean the opening range gap. How do we use this opening range gap and the opening day gap? You can say that is also important for me. And this is the new week opening gap. How we trade over here, and then price went higher. It is still over here. And let me just go to the 50-minute chart. What time is it now? 1:54. So I think we are inside the macro. So let me just check what is it doing over here. If I just mark the 150, here is 150. So just let me see what is it doing over here. And clone. Then I will go to the macro. After this macro, I will go to the morning macro. Okay, I'm in the 10:50 to 11:10 macro because it is also there is something I would like to talk about. And beam and Papa, not opening gap. Yes, thank you. The new week opening gap is more powerful than new day opening gap. Yeah, new week opening gap is really so powerful than any other gap. Okay, new week opening gap because you have to keep it on your chart for near about 5 weeks, at least 5 weeks. Okay, new week opening and 11:04, 11:20 ms within macro and in your macro will end. You would like to take entry 223 depending on the macro analysis. It is not possible. Okay, so you can't do that, but immediate after the macro, I mean 212, 12 to 13 but 14, you can take your entry. So far we can see that market has actually taken the, I mean, the buy side liquidity. This is the buy side liquidity. It has taken the buy side liquidity. I would like to see some kind of market structure shift to the lower part. If I have seen that, that will be great for me to take an entry. Where is my target? You see this fair value gap? Boom. That would be my target. Okay. I'm not telling you that it will happen. I'm just watching the price, how it is reacting over here. In the meantime, guys, if you just share the link, if you think it's helpful, it's insightful for you, and it has some information that will help you to read the price action, then please share the link so that some people can, I mean, they can know about this streaming, and also give me some kind of like, love or something like that. I think so. I think Stephen told me that it helped YouTube algorithm to let this video, I mean, more people will learn about this, I mean, this video. So give me some kind of love react or like something. That will be, I know, I mean, I'll be grateful to you. Okay. So that is the macro session. So far I have seen it has taken the buy side liquidity. I need the market structure shift to the lower part, but I will see how it did work. Okay. And beam ng, if you have any kind of question, you can ask me right now because I'm watching the price right now. So I will talk about the morning session, I mean the macro entry after this macro. And if there is anyone else who has some kind of doubts, or if you think you didn't understand what I mean to say, you also can ask me the question. Okay, brothers? All of you are here. I mean, I I assume that you are new. Maybe some of you actually knows how to read the price better than me. I'm not telling I'm good. I'm better than you. I know nothing comparing with you guys. So I when I will talk, I need to talk to think about like you don't know, you know nothing about price action. That's the way I have to talk. So please, if I am rude or if you get hurt by my word, I'm really sorry for that. I really wouldn't want that. And I would like to add something. This is really rude, and this is extremely rude. Okay, I'm sorry for that. Some of you guys actually shared your opinion. I mean, maybe you learned this from somewhere else, and you told me to check that out. I mean, that is more helpful or more, I mean, that works better than anything. I really, I really don't like that. Okay. I mean, I know what I know. I really don't care about your analysis. I don't care about your way to read the price. I really don't care about that. Whatever I learned, all of them I learned by myself, by watching ICT's video again and again, by doing very hard work. I really don't care about your analysis. Or if you found something from someone else, if that is really working, I hope best for you. I hope you will get profitable from that, that concept. There is no problem with me. But I really don't, I'm not interested about other stuff. That's the thing, brother. If you get hurt, I'm really sorry for that, okay? Sorry, brother. BNC, it's okay, brother. You are our teacher and we are learning from you. Thank you. You are my one of my best brother. Brother, don't talk like that way. An apostolo. I'm not your teacher. I'm your brother. Okay. All of you are my brother, and I'm not teaching you anything. I'm just sharing my understanding with you. Nothing else. I'm not teaching you anything. Priyanshu, bro, I appreciate your work. I have one request. Can you give all macros time? Yes, brother. I already I have made a video about macros, but if you asked me about all the macro, I mean out of this four macro, 950 to 1010, then 1050 to 1110, and then 150 to 210, and the last one is 250 to 310. If you would like to know outside of this macro, there's some kind of macro. Like if you see there is a macro at 228 to 232. Okay, that is a macro by itself. And if you would like to trade that macro, that is different. That is not same like this macro. These macro are independent. I mean, they're independent. They're not. They're free. They don't depend on anything. But I mean, other macros, they actually little bit different and tricky to use. That's why I didn't talk yet about all of those macros. Maybe later when you will understand the price action, what I am trying to share with you right now. If you understand that clearly, then I will talk about those macros, because those macros are really little tricky. Though I don't trade macros at all, in my opinion, this is the easiest one. I mean, these four macros, this is the easiest one. Trust me. If you just give this logic to a baby, he can trade and he can earn a lot of money. Easily, he can earn it. So I really don't trade this kind of macros. I love to trade. I mean, I love to take, what can I say, uh, challenges. So you see, that is the liquidity right now. I mean the lower liquidity if market would like to go lower. So far we can see market has actually taken the buy side liquidity, and we need market structure shift to the lower portion. What works outside the macro and what really happen within the macro? Can you please explain? Yes, brother, I explained it to my videos. So if I would like to explain it, it will take near about 1 hour. Do you think it is a great idea? I talked about everything. I mean, regarding macro, I talked about everything. So if you just check that video, I hope that will be easier for me and for you as well. Okay. The 1359 candle sweep the buy side liquidity, but is that one not enough? Yeah, brother, I told you that it has already taken the buy side liquidity. It has taken buy side liquidity from here, then here, now here. It has taken the buy side liquidity, but it didn't take the sell side liquidity. So if I get any kind of market structure shift to the over here, any kind of market structure shift with a fair value gap, I won't take entry. I mean, I won't go for the buy because it didn't clear any kind of sell side liquidity. If it go below this lows, then it will take the sell side liquidity, and then if it has given me the higher market structure shift, I will try to take entry after that. Right now, I'm expecting a lower market structure shift with a fair value gap because it has taken the buy side liquidity so far. When it went into the macro, it has taken the buy side liquidity only. And guys, any of you can check the mini S&P. Is there any kind of, I mean, setup? If there is any setup, then I'll go to the mini S&P. Okay. Okay, that I will watch all videos. Okay, brother. From macro section, you if you watch the second video, that is everything about macro. And if you watch the first one, that was actually the, I mean, I think I got market structure shift. Mm. So it has actually, what did it do? It's cleared the buy side. I mean, the buy side liquidity gave me the market structure shift over here. Now I need a fair value gap over here. If I see there is a fair value gap, I will go for short. Okay. If I see there is no fair value gap, then I will mark this as my sell side liquidity taken. Then if I get any kind of market structure shift to the above, I will go for short. I mean buy. Yes, 24 ms can happen on yes. I understand your point of view. Thanks for giving your opinion. Yeah, you're welcome, brother. But there is no fair value gap for ms. Still there is a fair value gap, brother. Still there is a fair value gap. I'm not sure it will keep open or not, but still there is a fair value gap. If you look at here, this and this is a fair value gap. Still there is a fair value gap, but I'm not sure it will keep. Okay, now there is no fair value gap. So uh, this setup is not valid yet. I mean this is not valid setup. Okay, right now it is not valid. I need some more information if I would like to take short. So far I can mark it as my sell side liquidity also taken. Now where I will get market structure shift with a fair value gap, I will go for that. Is it easy to understand? Look, I have the buy side taken, I have the sell side taken now. I need a market structure shift either way. The way I will get the market structure shift, I mean the clean market structure shift with a nice fair value gap, I will go with that. Simple rules, brother. Just simple. And Apostolo, I have one question, please. Just, MS strategy after liquidity and fair value. You told us in your video that work even outside. Yeah, I told that this market structure shift has to happen inside the macro section. I mean, it's the macro. Okay, it has to happen inside the macro. But you can take entry just after the macro, immediate after. I mean, the macro will close at 210. So you can take your entry at 211, 12, 13, 14, 15. I can accept. until 15. You can take your entry over there. But the market structure shift, it has to happen inside this macro. It has to happen, okay? I mean, you said in your videos that for market structure shift on the left, swing high or low should have been on the fair value gap for MSS. Yeah, I didn't get any market structure shift yet, brother. I told you that I didn't get any kind of market. Oh, okay. So you're talking about this one as why I marked this as my market structure shift. Are you talking about something like that? Why I marked this one as my market structure shift? If you see, I have a swing. I mean, did it actually trade it? No, it didn't trade in kind of fair value gap. It's my fault. Actually, it didn't. It is not eligible for being a market structure shift. You're right, brother. It is late. You're right, brother. Actually, there was no market structure. I mean, this is not market structure shift. I actually saw this one as swing low. This is my fault. Priyanshu, I'm from Bangladesh, brother. I'm not Indian, not even Pakistan. I'm from Bangladesh. Shantosh, you were right, brother. There was no market structure shift. I mean, there is no market structure shift. Actually, this is the liquidity taken. And now I got my market structure shift. I think so. I got my market structure shift over there. If you mark this, I mean, this high, it is all you can just mark as your market structure shift. I mean, this is the highest high, so it doesn't need any kind of, I mean, requirement. So this is my market structure shift because it has traded the highest high. It is the long term high. If it is the long term high, it doesn't need any kind of market structure shift. And guys, this is not any kind of, you know, direction for going I mean, for going to take entry. Okay, this is not something like that. I'm just hoping that it should work like that way. I'm just hoping it won't work. Maybe it won't work. So please don't take any kind of trade. I mean, don't take it. Okay. Thanks. That was my confusion. Yeah, Shantosh Buddha, I told you that you were right, brother. There was no market structure shift. Actually, I thought this low, I mean, this candle, what time is it? 1402. This candle actually swing low. I thought that, but later when I saw, man, I'm so tired, so busy. I was so busy and totally too tired. I didn't sleep yesterday because I'm sick actually. So I know some problem, but you were right, brother. There was no market structure shift over there. Now we have market structure over here, and if it can make the market structure, I mean, if it can reach over here, I will take the entry. So you can use imbalance finder indicator or FVG to be shown. It automatically shows parallel. No, brother, I don't need that because I actually don't look at the chart for too much time. Today's morning session, I was near about 3 hours in front of the chart, and now maybe near about one hour, something like that, just in front of the chart. That's why I'm feeling a little dizzy, and that is the reason I couldn't. I'm not clearly focusing on the price, but when I actually trade my live money, I go into the chart. I stay near about maximum 1 hour in one day. I just close my chart. That's all. Now these days, actually, I'm spending much more time inside the in front of the chart. It's because what to say, I don't know. So you see, it has actually didn't give you any kind of chance to take entry. If it came to this fair value gap, then that would be your entry, but it didn't give you any any entry. Okay. No, west side, Rajasthan, West Bengal. No, 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 brother, not West Bengal. I mean, what are you talking about? Are you talking to me? Till 15 minute, we can entry, right? No, brother, not 15 minutes. I mean, after two immediate 210, you can take your entry like 211, 12, 13, 14. Yeah, 215. Until 215, you can take your entry. But my expectation should, I mean, after watching all of this price, I'm not interested anymore to take this entry. I'm not interested. Okay. So that's the thing actually. But you can wait for that, because when macro actually happens, it will give you the chance to take your entry within 1 or 2 minutes after the macro. Just immediate after the macro, you will get your chance to take your entry. Maybe this candle would just tap to this fair value gap, then it went higher. So I will go to the ES. I would like to see what happened over there. I will just over there little faster. I'm sorry for that. Okay. So if you see over here, when it went to the I mean, just let me mark it. Okay. So this is the macro time. When it went here, it cleared the sell side liquidity. It has given you the market structure shift, and it gave you the okay. You see, guys, when it came into the macro, it has cleared this sell side liquidity. Let me just mark it. This is your liquidity. You see this low, and this low. I told you again and again. This is 20 candle. Okay, you have to take your decision depending on 20 candle. When it came here, it has taken the sell side liquidity. Also, it has traded the consequent encroachment from the higher time frame. I had a lot to talk about EMIN S&P today, but I am too tired. I'm not able to talk about this anymore right now. I forget about EMIN S&P already. Okay, and then you had a very nice market structure shift over there. This is your market structure shift. If you don't want to take this on, this is the most interesting thing in even S&P, that you will get so many volume imbalance, which is really helpful. You can use them instead of fair value gap. If you see this volume imbalance here to here, this is the volume. This kind of okay, one of my brother, he told me that he doesn't understand what is volume imbalance. Volume imbalance is, you see this body and this body, this place there is no body. Okay, though there is a very small body, so I didn't mark that on, because this is a like kind of indices candle. So there is no body. This is volume imbalance. This volume imbalance is more powerful than the, I mean, the fair value gap. Okay. Uh, what happened over there in QZ? 203. Did it went okay? So it actually traded the fair value gap. I thought it won't trade, but it actually traded. We will see later what happened over here. Just let me go to the E-mini S&P, because that was more clear than Nasdaq. Okay. So you see this fair value gap. When price came here, that should be your entry. Now, if I talk about this, don't think that you will go for this and you will jump for this. You will wait for, I mean the fair value, okay? Because you don't know which volume balance is important. That is also very important, okay? And there was your entry, and market came here, gave you a very nice run to E-mini S&P instead of Nasdaq. And right now price is over here. I am expecting that it will go to this opening gap high. That is my expectation. It will go until this, I mean, this opening gap high. That is my expectation. So if you are looking to S&P, there was a very nice man. Would you like to see how beautiful the trade, I mean the price action was over here? Just look at the price action, brother. It has cleaned all of this buy side liquidity, traded this order block over here, went higher very beautifully. It just go through this, I mean, this volume imbalance, the consequent encroachment of the opening gap just before this candle happened. It went to the consequent encroachment, then came to the lower part of the opening gap, and then from the opening gap low, it started to go higher. Now its target is opening gap high, where it could go. You see this hourly fair value gap from so far. It's from here, okay, here. So this hourly fair value gap is so, so beautiful to trade over there. It's very beautiful, okay. It is live IOFED, institutional order flow entry deal. Brother, would you like to talk about that institutional order flow entry deal? Maybe. Let's see what happened here. So our price is here. Maybe we are going to take our first loss. Um, I'm afraid, brother. Maybe we are going to take our first loss. So for price is over here, and boom. Guys, if you give me, if you give me some permission, I want to go for, for 2 minutes. I need to go to drink some water and, wash my face. If you give me the permission, I will go. Okay. I am, I'm, I'm too tired. Truly, to be honest, I'm too tired. So if you give me the permission, I will go and I will drink some water, and then I will face my wash. I will wash my face. I'm just talking rubbish, right? Then I will come back. And till then, you can watch how it works. Sure. Thank you, Bimanji. Thank you, brother. I'll just go and come back, okay? I need to drink some water. So I'm back. Uh, Pro Trader. Oh man, how are you? ICT Pro Trader Path. How are you, brother? Are you fine? And guys, I know some of you here. I'm expecting that you know everything, but if you really would like to know about very basic from the beginning, you guys can go to ICT Pro Trader Path. You will see he actually commented to his channel and he's doing a very good job. So if you really would like to check that out, you can do it. Okay, so that will be helpful for you. I can promise. You will be, you'll be benefited. Trust me. How about your channel, brother? Can you tell me? Write it down. Pro Trader Path. If you are here still, I took a short. I hope it works out good. Broad cryptologist. I took a short. I hope it worked out good. Why did you take short, brother? I mean, depending on the macro, if you talk about the macro, there was no setup. I didn't see any kind of setup for taking short. I I got this. You could take your buy. I mean, I'm not telling you to take entry, but I'm just telling you if you see the macro, it should work as as a higher run, not the short. Okay. So I don't know why you took short. I don't know. Is it cash chart? Uh, I don't know what does it mean. I mean, what is cash chart? I don't know, brother. This is the I mean uh, trading view chart, and this is trading view chart. That is all, brother. I don't know. ICT Pro, I'm good, bro. Finished your water? Yeah, I have just finished my water. I'm too tired, man. Today I was just it was disaster, man. To be honest. Santosh Budha, can you please tell us why that is the MSS? This one, the MSS, it's because this is the highest. I mean, if you look at all of these highs, this is the highest high. When you will see some kind of highest high, you don't need to relate it with news. If you see it, see any highest high, okay? That's why I took this one as my market structure. If you look at before, this high, this high, this high, all of them are lower than this high. This is the highest high. That's why I took this. I choose this as my market structure sheet. Is it clear, brother? Uh, Thanks for that, bro. It's okay, brother. It's perfectly okay. Stephen, it's ICT Pro Trader Path. He maybe mentioned you, so you can check his channel. He's doing good, man. So you can okay. Yeah, brother. It's fine. Alhamdulillah. I'm just doing the tiles work. The worker doing tiles, so it's going to finish. I maybe from the next month or I mean maybe from the next month I will be free. Okay, so because you will be in a losing side because macro doesn't work and it's kind of bullshit, so please don't listen to me. And that is your entry, and that was your trade. Everything is in front of you. Now it's your choice. If you'd like to take this type of macro trading, you can do. So far we have near about 14 13 to 14. If I just is I mean if I skip the yesterday's PM session, then it will be maybe 13 entry. We have no losing trade until now, and I'm showing this every day in front of you guys. I told you every rules, you know everything, and here is your proof. Okay. So I thought that was just the liquidity takeout. Brother, I was outlining over here. Um, I'm mistakenly I told that there was a market structure shift, but later I saw there was no market structure shift. Even If it was market structure shift, there was no fair value gap over here, no fair value gap at all. So you had no chance to take short over there, no chance at all. So you shouldn't go for short. Okay, I mean, the rules are simple. It will take liquidity first. I mark this as my liquidity taken, then I mark this as my liquidity taken. Then I told you I will wait for the market structure shift either way. If I get higher market structure shift, I will go for buy. If I get lower market structure shift, I will go for short. I don't care about any kind of, I mean, uh, higher time frame analysis. Nothing, nothing at all. Trust me, this is the easiest one, and you need nothing in macro. Okay, I hope you will find out your, I mean, your mistake. uh, ICT talked about spooling effect, how that worked. Spooling effect, I don't remember, brother. What is spooling effect? ICT talked about that. Can you mention me in which video? Because I maybe I forgot. Spooling, I don't remember, brother. So when did we decide to change bias away from the sell side? We had we had actually, I told you in the morning session when I will expect that market will go higher. I told you this in the morning session. If you were in the morning session, I told you if I have seen this highs, I mean this high is broken, I will see how it works to the consequent encroachment. If I see it can go through this consequent encroachment, then I will shift my bias. That means I will look for buy. I won't look for sell. I will look for buy if the market is able to go through this high, and the last obstacle will be this consequent encroachment. So we when it went through this, I mean the consequent encroachment, our bias has shifted. Okay, this is my world. I told it in the morning session. Okay, brother. So for, are you guys really confident by watching this? I mean this macro. I will go to the evening S&P so first, because I would like to show you the morning session macro. And so today, I mean the evening session, we had the entry over there. Before the, I mean before the Nasdaq, we had the entry to the evening S&P. But you see the what happened over there. Okay, Shantash, thank you, brother, for understanding, because it's very easy and it's very simple. So you can't just ignore it. Okay, I would like to talk about here, and I told you that you have to keep both of the market open. If you do it, then you will get at least one entry every day. So here is the morning session, I mean 10:50 to 11:10 macro. When price came into the macro, what is our first, I mean, what is our first rule? We will look for liquidity taken. What did we see? We saw market actually taken the sell side liquidity from here. It has taken the sell side liquidity. Then we will wait for the market structure shift. When did we get it? I mean the market structure shift, when we got it. I'll just move it. Okay, we got it here to this high. When this one has shifted, you see, this one has shifted, we had our market structure shift. Now you can ask me why this high. This high actually traded this fair value gap. Okay, this is the fair value gap which this high has it over here. So this is valid for shifting the market structure. When you will see this is the market structure shift, immediately you will go for the liquidity. So this is the liquidity, I mean not liquidity, I mean fair value gap. This is your fair value gap. Now you can say me, brother, it didn't trade the fair value gap. But if you close look, I mean if you look at this close, in a close way, okay, I don't know what to say. There was your volume imbalance. Volume imbalance means there is no body. There is only wick. There is no body. So market actually traded the volume imbalance. It didn't go to this fair value gap. If you see, there is volume imbalance just above the fair value gap, you will take your entry over there. This is the rules. But trust me, brother, uh, I will suggest you to wait until it trade the fair value gap, because you don't know which volume imbalance is important. That's why I didn't add the volume imbalance to my video. I mean the macro video rules or anywhere I didn't mention this. If you wait for here, like now you have already got your entry to the PM session in Nasdaq. That was a very perfect entry. Okay, so you don't need to take this entry. But if you can understand what is volume imbalance and how to use this volume imbalance, then you could take this entry. Okay, the entry should be to the upper level of this volume imbalance, and your stop loss should be here. Mm, the candle, you should have put your stop loss below this candle, but I will go little bit lower. It's because there was another volume imbalance, so price can easily come to this volume imbalance and make a longer, I mean longer week. Okay, so you will be stop loss. I will put my stop loss over here. I don't care about the stop loss. You see, until now how precise this macro. So why you will, I mean, think about your stop loss, and your target will be 500. So you will stop just over there. Just over there you will stop. You don't need more, I mean more run. If you'd like to take all of this run, then you are greedy. And if you are greedy, you will be the loser. Today or tomorrow you will be the loser. If you don't believe me, you just try it, okay? Then you will understand why I was talking about that. If you are not greedy, you will continuously earn some money from this trading chart. You just do the trade, I mean the macro trade, that will be enough for you. I mean for your earning, okay? That will be enough. Trust me. If you just follow the all of the rules, that will be that will be easy to earn some money from this chart. Later, when you will understand from I mean from the beginning of this session, I talked about everything about the I mean the price action. If you take some notes from the price action, what I taught, I mean talk about, you will understand how to read the price. That is the thing, brother. It's okay, brother. Shantosh Buddha. It's okay. Okay. It's been 8 months, and only now I am starting to understand ICT little bit clearly. It's my pleasure, brother. And I am trading ICT. I mean, I am with ICT for near about 32 months. I mean, I am just studying his stuff for near about 32 months. Okay. This October, I went to 32 months. So that's the thing. Okay. But I think you guys don't need this much time. It's because when I started to learn this thing, there was no one to answer my question. I talked about this too many times. I mean, I always tell this, that there was no one who will actually clear my doubts. But here I am with you. If you have any kind of question anywhere, I'm in Twitter, Facebook, or live streaming, or the videos I upload to my YouTube channel, you can just ask me the question. I will try to reply you. I always try to reply you. If you are already with me in my channel, then you know already that. Now look at this over here. Now I would like to talk about the price action. Just forget this whole things. Okay, this is not important anymore. How do you know where market can go? Just let me go to the hourly chart. Should I continue or I should stop right now? Let me know first. Okay, I ought to know. Should I continue or give me the reply? Otherwise I will just close my, I mean close everything. I will stop streaming. Just let me know. Should I continue or I should stop? So there's someone you are interested, still interested with this boring lecture. I am tired. To be honest, I'm very tired, but I would like to talk about something. What do you think? Price will go higher? Still now I'm expecting that price will go lower. Trust me. Still now my bias is bearish, not bullish. Market is going higher. It's because there is this imbalance. You see this imbalance. I'll just mark it from every hourly days. Okay. This is the weekly fair value gap. What market did? Can you clear all of this? No, I can't because then I have to do it again. I do not want to do it. You see this candle's high and this candle's low. This is the fair value gap from weekly chart. This is the weekly chart. Okay, price is going higher. Actually, it is trading this fair value gap. Still now I am thinking price will go lower. It will go to this fair value gap, weekly fair value gap. Then there is a volume imbalance. That is very nice volume imbalance. I mean, then there is lower fair value gap, whatever. All of them, they're very, you know, brother, you are talking about TGIF. TGIF means you have to, I mean, mark. No, I can do it because then all other annotation will be here. So I don't wait like this. Okay, so I don't do it. TGIF is the price will close 20% or 30% total range of the total weekly range. Okay, that is TGIF. So if you would like to take the TGIF, then you have to take your short. I mean, at a certain level, you will have to take the short. And for TGIF, uh, you can do it, but you need more experience, in my opinion. Still now, I can't do it. I mean, the TGIF. I tried it and I took loss to my funded account. So, uh, Pro Trader Path, are you there, brother? Pro Trader Path, if you are here, then just let me know, okay? So I'm not actually doing the TGIF. It's because TGIF is little bit tricky and I tried it 2 times and I took loss. So that is why I don't trade TGIF. I need more time to understand TGIF. I don't want to talk about that. Right now I would like to talk about the price action, okay? Okay. Protector, you remember I tried it. I tried the TGIF. I told you that market will close 20% or 30%. So I took it. I took a short, short or buy something like that. You were with me. I mean, we were sharing our chart, something like that. If you have remember, like maybe 1 month ago, something like that. Uh, Still no, I actually I don't understand clearly TGIF, but if any of you understand TGIF, then you can trade. Okay, I'm not telling you that please don't do TGIF. If you can do, you can do, but I don't understand that. The Not yet. Okay, I need more experience about TGIF. Right now price is actually trading this fair value gap, this weekly fair value gap. I will go to the daily chart. If you see the daily chart, there is a very, this is the imbalance. Okay, I mean, not sell side inefficiency, imbalance, buy side inefficiency. Okay, yeah, Friday kills on, yeah, Friday kills on last hour, right, brother? Jim Brown said, I don't care if only one person and here in the audience listen, I'm going to keep teaching. Yeah, brother, I will keep teaching. I don't care about anyone. If there is no one, I will talk by myself. Maybe later someone will watch my video and they will learn from here. When I will finish learn, teaching, not teaching, I'll finish to share everything I know, I understand, I will quit then. Before then, before that, I won't quit. If there is no one, I don't care. Today it not TGIF setup. Some requirements need price done at lunchtime. Amga, yes, brother. I'm not familiar with TGIF to be honest. Maybe you can think I know nothing, but you can think, but I really don't understand TGIF. It's very difficult for me because I don't know what is the last range of this candle. Then how do I know it will close? This is its last run. How do I know? That is the thing. I don't understand. Maybe I need more time to understand TGIF. Yeah, this it is the weekly candle, but the expansion, where when it will stop, how do I know? I don't know when it will stop. That is the thing. Okay. Okay, so many actually comments. I don't want to go to the DGIF because then I will be, lost. I don't want to be lost right now. I would like to talk about the price action right now. Then maybe we can discuss about the TGIF. Right now, price is over here. You see this little imbalance. If I go here, let me. This is the fair value gap. This is the I fair value gap, and there is a very little fair value gap. Okay, I will mark it, but there will be so many. I mean, so many places. So if you can can't understand, then I will be. I don't know what to say. So there is also a very little daily fair value gap. Price is actually going toward that fair value gap. In front of, above all of this fair value gap, there is also a fair value gap over here. I want this keep open because that should be work as a breakaway gap. If it keeps open, market will go more lower. It will go to this daily fair value gap. It will clear this sell side liquidity, everything. It will go lower. If it happens, it will happen when price won't go over there. My expectation is this is the place where price will give some kind of reaction. I mean retracement. It will, I mean, it will go from here to lower. That is my expectation. And I told you from the beginning of this video what is the expectation means and how we act with our expectation. We don't go with our expectation. We go with the price, but we expect how it will act. If it acts like we are expecting, then we will take our entry with our maximum lot. If we see, okay, price is not reacting with our expectation, then we will take our entry with little lot size. Okay. So I just told it again. Right now, price is over here. It go through all of this. This I fair value gap, this two line. I mean, this I fair value gap. This is very important, guys. I don't want to see price will go through this fair value gap, I fair value gap. If it can hold the price, that is very, you know, that will be the expected price. I mean, I would like to see price won't go through this I fair value gap. I will go to the hourly chart now. Right now, you see price is actually traded the highest level of the I fair value gap. Now you have two level. What is your two level? This is the daily fair value gap low, I mean high, that is your low range. This line and also the daily fair value gap high. This is your high range. This is your two range. I will go to the 1 minute chart. Here is your 1 minute chart. Okay. Now, if price would like to go higher, it will go through this. Try to understand this very carefully. If it would like to go higher, it will go through this. If it would like to go lower, it will go through this. If you see, the bodies are closing above this level. I mean, this daily fair value gap high price is actually closing above this level, and price go through this. I mean, the body actually closed inside here somewhere. This is the sign that price will go higher. And if it just close below this level, then you will expect it will go lower, some kind of imbalance. If you look at the price over here, this is your imbalance. I mean, this is your most recent imbalance, and there is another imbalance over here. This is also your imbalance. So maybe price will go on of them. Right now, you see this candle, it reacts that it don't want to go lower, and this candle is showing you I don't want to go higher. You have no bias, and we are going to I mean we are just 2 minutes before the macro. What is the macro? 250 to 310 macro. We will look for the macro. Uh, but that is different thing. When price will reach a certain level, how do you read the price? This is the way you will mark two level. One is above the price, another one is below the price, and you will look for them how it works. Right now you have no direction. You see, it didn't go above there, it didn't go through this. So you are inside this range. You have no direction. Wait for the direction. Wait for clear price action. When you will get the clear price action, you will take your ending. Now tell me, now in the PM session, isn't it more clear when the PM session has started? I mean, from one, where is one? Here. From this candle, this is your, I mean, the PM session. Isn't it more clear than the morning session? You see this morning choppiness. This is the lunch hour. Sorry, this is lunch here. This is your morning session. What all of this rather? See all of this choppiness. I mean sloppiness here, here. Then later you from here to here. It's huge time, brother. You can't control your emotion this for time. Okay, this much time you can control your emotion. It's nearly impossible, brother. You see all of the price action, it is very difficult to read the price like that way. That's why I told you, after any kind of big news, avoid the AM session. Wait for the PM session. At the PM session, you will get more clear price action. Now look at the price over here. After one, that means after this candle, there was a little consolidation because this is the macro. I mean 150 I mean 1250 to 110 macro. This is different. You can't like you can't add them with that macros, so you can't do it. Okay, so right now price is over here and I think we are inside the macro already. So far we have seen that market has actually taken the sell side liquidity from where here. We have seen that market has taken the sell side liquidity. I am looking for a higher market structure shift. Was that candle inside? No, it's 420. Okay. Shantosh Buddha, it will happen, but you need to wait until 4 p.m. New York time. It is the last hour of the weekly trading hour. It's new week opening gap at 1 minute for August 28 probability going there. Hmm. Fair value gap trade, the risk date didn't happen. Is to trade and master one or two strategy, don't look for everything. Yeah, pro trader path. I have already taught them the easiest thing. I mean the macro, and if they are strict on that, that will be enough for them. But I want them to understand the price, how to read the price. That is why I am doing this kind of boring shit, you know. This is the boring part. Okay, how to read the price when you will I mean, reach a specific level. How do you read the price? Because when you will see the market like that way, you have no idea where you are and how to use price by a Shantosh, no brother, macro is not the best thing. This is the easiest thing, brother. Trust me, it is the easiest thing. I want you to learn the price action so that you can just jump to the chart and you can find a entry. Okay, that is my goal. And you are learning price action without any intention. What you need to do is you have to just keep some kind of taking note. Okay, you have to take the notes. If you don't take the notes, like I told you, whenever price will go some place, like here, when price came over here, you have to mark the consequent encroachment. If 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 you mark the consequent encroachment of this fair value gap, then the high level and the consequent encroachment level is your boundary. How price reacting over there, you have to observe that. When you will get some kind of information that market actually would like to go higher because it failed to break the consequent encroachment, then you will look for a entry. Like here market is right now over here. This is its boundary. So if it would like to go higher, it will go through this, and it will tell you that I don't want to go lower. And if it would like to go lower, it won't go above this boundary. it will go lower. That's where you will read the price. If you read the price, that's where later, I mean, this is the first step, and later you will understand how to read the price. But all of this information you have to write it down on your notebook. If you don't write it down, just watch and think that you will do it by your own when you will be in your chart. Trust me, you can't do it. You can never do it. That's why you will forget everything I will tell you here if you don't take the notes. I'm not telling you, Santosh. I'm telling everyone. I mean, whoever like watching the video right now, I'm telling everyone. Okay, so don't think I'm just telling you and you get angry on me. Why, brother? Why me? So I'm just telling everyone. If you don't take notes, just watch Netflix. You will learn nothing. So far we see that market has actually taken the sell side liquidity. How do I know it has taken the sell side liquidity? Let me show you. You see this low and this low. These two low are the real, I mean the equal low. Also there is a swing low. Below every swing low, there is liquidity. And this is also the, I mean the clean low. So market went through all of this. So it has taken the sell side liquidity. When market came into the macro. Now I need a higher market structure shift. Where is my market structure shift? This high, you see this high. When this one will broken, then that will be my higher market structure shift. And I didn't get any kind of buy, I mean buy side taken yet. If you look at here, there was no equal highs or no, I mean swing high where I can mark that it has taken the buy side liquidity. That is why I am expecting higher market structure shift. Now you can ask me, brother, you don't know which way market will go? No, I don't know. Trust me, I don't know where market will go. Market will tell me where it would like to go. It has taken sell side liquidity. Now, if it gave me lower market structure shift, I won't take my entry. I won't do it. I will wait for higher market structure shift with a very nice fair value gap. That's all. So this is the waiting time. In the meantime, tell me, is there any improvement of my voice? I mean, is it still understandable? I mean, not understandable, something like that. So you see, market came to this level, okay? It went through this, and if I see the candle close below this level, that is the sign, okay, market would like to go lower. That is the sign, okay? This is where you will understand the price. If you see body is closed above, then it is telling you that no, brother, I don't want to go lower. I would like to go higher. Please don't take any kind of short. That is the way. Now I will just put my, I mean the liquidity taken over here. Thank you, Vamshi. And guys, if any of you are new to my channel, can you please give me a subscriber? I'm just joking, okay? If you really like, I mean, like the videos or the way I read the price, you can subscribe to my channel. And if you are new, you can do it. In the meantime, if you guys would like to share the live streaming, I mean, link so that some more people can they can sorry, they can know about me. That is also very, it will be helpful for me as well. So yeah, thank you, brother Shantosh. Thank you, brother. I'm just doing some work so that you guys can understand what I do. I'm not any kind of teacher, so don't think I'm a teacher. I'm not a teacher. I'm your brother, and I'm just sharing my understanding with you guys. That's all, nothing else. Ah, thank you, Vamshi. Thank you very much, brother. One more thing, I think I should tell this. It's because if you guys, if you want, you can just, I mean, there's some kind of push the notification. I mean, there is something notification bell button or something like that in YouTube, so that if I just I mean, upload any video or I come to the I mean live streaming, it will notify you that I'm doing that, something like that. If you do that, I think that will be also helpful for you to get my video easy way. Okay, you don't need to search my, I mean, my channel for new videos, I think. Okay, now if this candle, if it is able to break this high with a very nice fair value gap, will I go for buy? No, I won't go for buy. This high didn't meet my requirement, so this is not my swing high for shifting the market structure. Okay, this is very important, guys. You can't just take a high and think that is your market structure shift. You can't do it. If I don't get any kind of setup, I don't care. So here, okay, now it's 2 for 59, so we have 11 minutes left, and we will see how it works. Okay, in the meantime, one of you guys, if you want, like if you have a multi monitor, you please open the emination chart and let me know there is any kind of setup or not, as we are waiting for the higher market structure shift for the, I mean, Nasdaq. I think if you go to the emination P, you will see the same thing over there. But is there any market structure shift or something? Just let me know. Okay, do this for me. Do some homework, brother. Don't just give everything on me to do. Do it. Just go to the emination chart and look over there. Is there any, I mean, any setup or not? Okay, and let me know. No setup in yes. Thank you, Bhimanji. Bhim, you're from India, right, brother? And I think you're from Kolkata because you talk in my language, I mean Bangla. So still now there is no setup, and this time maybe we will see market will actually close below the, no, it didn't. It went again. Yes, Tada. Okay, brother. So I am planning to go to India, and maybe I will knock you. Then you will show me your country, okay? India is very beautiful, I know. I will go over there. Sooner or later, I will go over there. I'm planning to go to Darjeeling. I have watched a movie called Barfi by Ranbir Kapoor. If you have seen that, I don't know, Barfi. From there, I'm a fan of Darjeeling. I will go over there. And guys, I have a question. Do you understand anything about price action after all of this? I mean, all of this time. I had started maybe what one, yeah, today at 1, and it's 3 already. So tell me, did you get anything from this video? You saw that me? Yeah, man. It's very nice. I love that movie. His acting was awesome, man. So let me know if you get anything from this video. Do you, I mean, there is a level, right? Previously, how did you see the market, I mean the price, and right after watching this video, is there any change, for, I mean, your observation, is there any kind of change? Do you feel something like that? Just let me know, because your feedback is very important for me. And I will close my live streaming after this macro. And thank you, Bimanji. Eric, thank you, brother. Because I'm talking, but I need some kind of feedback from you guys, because I don't have any idea you are understanding or not. So far, what do you see? This is the lower part of your range. This is the higher part of your range. You can see this one or this daily fair value gap low. This is your range. So price should go. It should show you that it would like to go that way. Right now, my market is over here. If it can close here, that is the sign. Okay, market will go lower. Okay, What do? You will just take your entry? No, you won't do it. Now it went through this, this gap. I mean the higher part. Okay, it came here. Now I will see how it react over here. Still now I have the sell side liquidity. This is for macro. Okay, this is now I will look at the price. If it can take any kind of buy and give me a very nice market structure shift, I will be confident. Okay, market will go lower. Where it can go? This is the last, last inefficient place. This is the nearest inefficient place. If it matches 20 handle, I will go and I will stop over there. If I see that okay, no, it doesn't meet that rule requirement, then I will go until this fair value gap. Right now, it is telling me that I would like to go lower. But if I see another candle, it will go above and close over there. What will I do? I will do nothing because it is showing me both way. It would like to go lower, it would like to go higher. So that is the thing, okay? You have to understand the price action, and it is inside the macro. So in the macro, no price action will work. Trust me, no higher time frame analysis will work. Nothing will work. Inside the macro, macro is enough. It doesn't need any kind of requirement. So you have to wait until macro finish. When macro will finish, then you will go back to your price reading. But how long it will stay inside the macro, you can't do. You can't take any kind of decision depending on your high time frame analysis. Let's see, is there any chance to or not? I will go to elimination pit first. I would like to watch what is doing it over here. So far, I can see it came to this opening gap high. So this is a place where it is very strong. Okay, it is making this as it, as its support. Now, if I get market structure shift, where will be the market structure shift? There is no swing high which I can mark as my market structure shift. If you look at this high, this is not market structure shift high because it doesn't have any swing low which is lower than this low. Swing high which is lower than this high on its right. Though I have one in its left, but no swing high in my right. So this is not eligible for being market structure shift. Okay, if you mark this one as your market structure shift, you will break your rule. Maybe this time it will work, but next time you will take the losing trade. Trust me, it will happen. So don't mark this one as your market structure shift. If it goes above them, above it, you will mark it as your liquidity taken. Hey, Stephen, you are here, brother. I thought you were not here. And here. So I can see. mm, let's see the price. I didn't see anything very. No, brother, nothing. So I got both of them. The buy side liquidity has also taken. The sell side liquidity has also taken. Okay. Sorry. Eric NQ MSS. No, there is no MSS. Stephen, I'm talking. Okay, what? I'm taking note, sir. You're not taking what? You're not taking. Now MSS. I'm here taking note. Oh, okay, you are here taking note. Okay, I got you, man. There is no market structure shift yet. I got both buy side liquidity taken and the sell side liquidity taken. I didn't get any kind of market structure shift yet. I am not going to take any kind of entry. Still now I don't have any kind of what can I say? No setup. I mean, there is no. I have a swing high over here on its right, but there is no swing high on its left, right? If My eyes are glazing, so you can check as well. Is there any swing high on its left, on this high's left? Is there any swing high? I don't think so. There is a swing high. If there is no swing high, I won't take any trade. Maybe this time it will work. I mean, it will trade this fair value gap and then it will go higher. Maybe it will happen. But I won't take risk. I won't break my rules for one time profit. I will keep my rules for long time profit. Okay. For you will understand that later. Okay. You will understand. I won't need to tell that to you. So there is no market structure shift. Yeah, Shantash Buddha, there is no market structure shift. Now I get a market structure shift here. This is my market structure shift. I mean this. This is my market structure shift, and I will mark this one as my fair value gap. This is my fair value gap. If market can come here, I will take my buy. My stop loss will be here. It should be here. I will go for 20. And trust me, guys, maybe this time it won't work. Okay, Shantosh, this is the highest high, brother. This is the highest high. There is no high. I mean, higher than this high. If you look at this high, there is a high which is higher than this high. Okay, but if you look at this high, there is no high higher than this high. That's why you don't need to. I mean, mix this high with any other highs. This high is enough. I mean, it is independent. Okay, you don't need to. Well, I think you understand why that one is. I mean, higher high. Okay. And if you take this entry, I mean, with your real money, you will take loss. I guarantee you, you will take loss. Trust me. Market will never go higher. It will go lower. I just showed you this one. It's because you guys, I mean, you are actually trading the macro. So that's why I'm just showing it to you. You see, it has, I mean, this is a losing trade. If any of you took this entry, you took the losing entry. I will mark this low actually. I would like to mark this low. Okay. I will look the price little bit more. Then I will talk about this entry and you will understand what is the thing over here. And you see nothing is 100%, what can I say? I mean, losing proof. There you have to take some kind of losing trade. Though it won't be a losing trade, this is my belief, okay? It won't be a losing trade. I believe that it won't be a losing trade, but there is nothing which is 100% losing proof. Trust me, brother. There is something I will talk after 2 to 3 minutes, okay? I will talk about that, why I did this and why I was expecting another thing. But if it doesn't work, then I will tell you also what I was thinking. I will tell you honestly what I was thinking, okay? But just let me go some other candle so that I can explain this. I thought MMS only happens when a swing high or low trade on the no brother, when you see these highs, if you would like to mark any of them, then you have to meet the requirements. But if there is a swing high which is the highest high, I mean, no highs are higher than this high, then you don't need to. If you mark this one, it has the swing high on its left, it has the swing high on its right. You see this swing high, this swing high, this swing high, this swing high, all of them are just on its left, and all of the swing highs are on its right? So this has met on requirement at least, okay? That is the thing, okay? Okay, so I'm sorry for that. I was thinking that I put my stop loss over here internally. I would like to put my stop loss over here, and that would be my exact entry. But it actually it would hit my stop loss as well. You see, it went above. I mean, it came here and stopped me out. So that is the thing I was thinking. I intentionally put my stop loss over there so that if any of you take your entry, you will take your loss. But if I would take this entry, my stop loss would be here. I mean the lowest part of this candle. That would be my stop loss. But you see, it actually hit the stop loss. I mean, I am stopped out. So that is the thing. It was a losing trade. After so many winning trade, we got a losing trade. Oh, what a feelings. I thought, Winston. So do you take market order or limit? Prefer wait for candle to complete during macro? No, brother. I just I love to execute market. I mean market execution. I really love that. I really love the market execution. And still now I'm thinking market will go higher. Trust me. Still now I'm thinking market will go higher. Though if you look at the price action, market is telling me that it will go lower. Why? You see all of this candle, it refused to go higher and it came below this higher level of this fair value gap. This is the fair value gap high. So it went below this fair value gap high. Depending on the price action, it is telling me that I would like to go lower. Why I am thinking that market will go higher? It's because if you look at this price action over here, just this price action, what price did? It went above. It has just made, I mean, the high went above. This is the zone where actually retail trader are thinking it went very high. So now market should go lower. So they took the sell. They mark this zone as their resistance level. So I am thinking market will go higher one more time and stop them out. Then if it would like to go lower, then it will go lower. Price action is telling me that market would like to go lower. Why? It closed below this high level. I mean the daily fair value gap high. You see so many candle closed just below this level where you will see the wick. That is just wick. Okay. So all of these things are working over here, and inside the macro, if you see, it has given you a very nice market structure shift over there with a very nice fair value gap. So if you take it over there, stop loss should be over here. I mean the below this candle, this should be your stop loss, and your target should be 20 handle. That is your macro entry, and this is actually a losing trade. After so many days, I have seen the losing trade. This is the losing first losing trade with obvious reason. Now if you think you are actually losing proof, then you are wrong. Today if you see the mini S&P and the Nasdaq, maybe we got three entry, right? At 11 and 2 and this one. So we had two winning entry and this one is the losing entry. And nothing is 100% certain. So uh, Benjamin, can you please explain what really happened here? Yeah, I told you already what really happened over here. It actually, I mean, stopped out all the sellers, I mean buyers from here, and now this this candle, these are making I fair value gap. I'll just remove this one. This is acting as I fair value gap. Though I believe that market will go above on, though I believe this is my belief, okay? Because right now I won't take any kind of entry. Right now market is actually manipulating. You see, it went above this high, it came below this low. This is the sign that market will go slopiness. I mean, you will see some kind of slopes. This is the sign when you will see a very nice setup, but the fair value gap doesn't work. What did you see over here? Let me show you to remind you, okay? what you have seen over here. That was a very nice setup. Market went above, it went lower, it go above, it went lower, it go above. It was just doing this because this is sloppiness. This one I'm expecting over here. I mean, market will now it will be sloppy. It will go above this high, it went below this low, it will go above, it will go lower, it will do this thing, and then the real setup will happen. Now tell me, which fair value gap is important now for me? Any of you, just tell me which fair value gap is important now for me. I will mark it 1 and 2, okay? And if you don't tell me, I will just close my streaming right now. Which fair value gap is important for me? Which one I will keep and which one I will remove? Just let me know. You have to write it down, brother. There's 11 people, so I want your opinion. Which fair value gap is important? Number one, number two. Which one is important? Which one I will remove from my market and which one I will keep? I talked about this too many times. Number one. Why, brother? Which fair value gap was important for me? Number one, number two. Which one was important for me? Oh man, this one, the lower one. This is the lowest one. Yeah, unapostolo. Yeah, number two, the breakaway gap. The breakaway gap should be important for you. Oh man. Yeah, number two, breakaway gap. Yeah, you're right, brother. Number two is important for me. I don't care about this fair value gap. This one is useless. I will keep this fair value gap, this breakaway gap. It is important for me because this should be the breakaway gap. It is important for me right now. I will look how it trade over here. Now it went through this. It didn't use as a, I mean, what it should do. It should do something like this, right? But it didn't do it. When it went through, what it should like do? It should do something like this. It didn't do it. Now, if it can go through this and come over here, this is the sign to take your buy. If it went through this, again, if it go below this and then come here, this is your sell. This is your sell. The breakaway gap is important, not the higher one. This one is fair value gap, which is not important. The breakaway, brother, don't push your button right now because this is Friday and market is going to close. So it will do something which is very unexpected. Every week, the last hour of, the Friday last hour, that is something. It needs more experience to read the price. So please don't push your button, not even in paper money. This is very important. Okay. Right now, this fair value gap is important for me. It's because it also the breakaway gap, not this one. This one will act as a high fair value gap or any kind of fair value gap. This one will work, not the upper one. That's why I want you to take the notes, brother. Maybe my voice is the reason. It's broken, I know. That's why you don't understand it clearly. I will work with. I'm actually working with that. I will try to fix that. I hope sooner I will do it. I'm extremely sorry for my voice. You don't understand that. But the reason is this breakaway gap is important for me. I will look for this breakaway gap. The im I mean the ex it will go above, it will make this one as a support, it will go higher. That is my expectation. Why? It's because whenever you will see, I mean you will uh, expecting that higher price, it will go higher. You will see this kind of sloppiness at the end of the day. It will go little bit higher, then it will come back to this fair value gap, then it will give you the real run. That happens, okay, most of the time, not 100%. Nothing is 100% certain in this game. Nothing. There is nothing which is 100% losing proof. Nothing. Nothing at all. Okay, brother, and Apostola, I will also, I will also quit my trading. I was just waiting to see how it trade the higher level. That's why I didn't close. I wanted to close it after the macro, but when I saw this loss, it's kind of, if I would take this loss, I would mitigate my loss. And how this is the way I would take my I would try to mitigate my loss. You see, this is the water block. Sorry. Apostolo, I think we will talk later. You can sleep, brother. Just sleep well. And so, brother, this is the outline. And if you look, if you understand the breakaway gap theory, how why this gap is important, I think it is clear for you guys as well. And I really expect to go price higher, at least clear all of this buy side liquidity. And what I told you, actually, that would be my losing trade. To be honest, that would be my losing trade, because I would take my over there and I would put my stop loss just below this low, and my target would be, I mean, 20 candle. Where is it? Something like over here. Okay, that would be my trade. But you see, this candle, it actually stopped me out. So that is my first losing trade. In macro. You're welcome, Santosh. And if who is thinking that macro doesn't work, why you mark this down close candle as O plus water plus not other? Okay, brother, this is the one thing I would like to share with you. That is, I won't talk about order block anything. I will not talk about order block anything. It's because ICT himself tell that he will actually disclose everything about order block. That's why I really don't want to talk about order block. What I understand from order block, it is just watching the market again and again. I really don't want to talk about order block. It will be offensive. I think it will be offensive, and that's why I don't talk about order block. Never ever I will talk about that. If you get hurt, I'm really sorry for that, but I really don't want to talk about order block. I'm really sorry, brother. So my expectation is it will come back to the level, either order block or the fair value gap, then it will actually expand higher. And that's all for today. And if you guys have any kind of question, you can ask me. If you don't have any question, just let me know, is it okay or not for you guys. I mean, for understand. Okay, that's done. That's enough. So actually it hit my stop loss here for maybe for one tick. Otherwise, it was a perfect trade. I will go to the even S&P. So first, and in the meantime, guys, please let me know if you have any kind of question. And okay, here actually we didn't had any kind of setup. So we didn't have any setup in even S&P. So Nasdaq NQZ 2023. If there is anyone who is little bit conservative, I think if they put their stop loss little bit lower, then it should be a winning trade as well. But it is what it is. I mean, this is the way you will read the price. Okay. I mean, I think it should be very easier to understand. Now, just Bim, thank you for all your answer. You're welcome, my brother Stephen, and I think Santosh, all of you guys. Do you have any kind of question? If no, then I will just stop streaming, and Beam as well. If all of you, if you don't have any kind of question, I will just stop streaming right now. Just let me know, okay? And please don't forget to just comment before closing this streaming. How was the day? Did you understand anything or not? It is also important for me, so just write it down. I will wait for 1 more minute. I will waste your 1 more minute, then I will close. Okay, just let me know. Mike George, thank you, brother. I think you are new, Mike. I never saw your name, Mike George. Did I talk to you before? Mike George. No, I don't remember. Yes, brother. Thank you so much for today and wish you very good. And thank you, brother. Thank you very much. So we are almost to hit our target, though I am stopped out over here. That is the thing. It happened actually in Friday last hour. It's very difficult to trade. I took so many losses in I mean Friday last hour. Julian Roses, do you have a signals group? No, brother, I don't do it. I don't do signal or something like that. Okay, boom. We have the winning trade after they stopped out. Okay. I'm just kidding, but this is the logic, and this is how we will trade it. Trade the macro. Okay. No, Julian, I don't have signal groups, brother. I don't give signal. I gave you the setup, the macro setup. I don't know. Maybe you are, no, you are not new. So you already know how many winning trade we have in macro. Even today, we had three macro entry and two were winning. This one is losing trade. This is the first time I get a losing trend in this 2 week. Okay, so 10 days we get first losing trade. I think you don't need any kind of signal. Uh, it is very simple. It will take the liquidity, it will give you the market structure shift and fair value gap. You will take your entry to the fair value gap. Boom, 20 handle. Okay, that's all. Mike George, not no, but I have been watching for a couple of days. Oh, okay. So, Mike brother, you are welcome, brother. And that was I was thinking that I never talked to you. So, guys, that is the thing for today. And trust me, if you are staying with me by this this voice problem, if you can avoid this voice problem, because I am not able to fix this problem. I need more time. I need to go to Portugal again, but it will take time. Then maybe I can manage this voice problem, this for my internet, so or something, I don't know. So then I will try to fix this. If you stay with me, I promise you will learn how to read price. You will know when price will go higher, when price will go lower, which fair value gap you should use for your further information. All of these things you will understand. Trust me, and I promise you, you will learn that. So that is all for today, and thank you guys for being with me, for listening to my boring lecture for this long time. I hope everyone will be okay. If any of you are new over here, you can just subscribe to my channel, give me a thumbs up to my video. That will be really grateful for me. And have a nice day or night. Anything would like to connect with you on social media. I'll talk about that later, brother. Now, right now, you can just message me to the Twitter and or just comment me. I will connect with you from there. So, see you guys. Bye bye.